The Momentum Value Fund has averaged an annualized return of 20% over the last decade to end of December 2012. This is slightly below the sector average return of 20.41%, but above its benchmark return of 19.1%. And with a new sheriff in town, will the performance of the fund change relative to that of its peers or its benchmark? Sam Houlie is still in studio with us, and before we go back to him, Warren's going to give us a little context.
Right, Bronwyn, this is just a little bit of context around the value fund, which obviously Sam's just taken over the running of. But just to show you, this is a five-year chart of the performance, and we can see a typical value fund doing well in the really tough times. As it came down here in 2009, it recovered very quickly. That's, I think, a fair attribute of a value fund. But we've just seen that this is not relative to its benchmark, which is the Swix All Share Index. This is the All Share Total Return Index. And you can just see the fund dipping underneath the performance of the All Share Index there and its peers in the domestic equity fund. And I'm sure Sam wants to change that. If we just go to the next graph, you can see the performance of the fund relative to those benchmarks again, the peers in the beige and the All Share Total Return Index in green. And you can see year by year over the last 10 years how it's done. Had a really great year again there in 2009, and then kind of mediocre over the last 3 years. So just interesting to see how that's been going. And then if we can just go to the last slide, which I think is the top 10 holdings, this will just bring up some of the positions that Sam's put on in the fund since he's been there. And we are going to go to full screen to see that. But the biggest holdings in the fund at the moment, Anglo-American Platinum and Anglo-American PLC, to about 15%. So I think that might be a good chance to ask Sam what he's seeing there.
And already you've impressed me with your telecom call, because as I said, for love or money, I haven't been able to get anybody to take that plunge and say that they are buying telecom. So Anglo Platinum is another of those stories where many people are reluctant to go anywhere near the stock.
Yes. Yeah, I think the key thing is that we feel very strongly that we're not really paid to attach ourselves to rosy outlooks, mainly because clearly these things are not in the rubbish bin. You know, behaviorally everybody has very high expectations. So the platinum sector that's a sector that really attracted me the very first time I came back, and the team, just to give you some insight into the team spent all of our time in the first 2 months of my being here, which is July, August, and into September, working on platinum stocks, all the stocks. And the intriguing thing is that most people don't realize this, but the platinum sector bottomed in August.
Right.
You know, whereas obviously today the most controversial and a platinum stock, and the stocks with the biggest headline risk, is probably Anglo Platinum and then Lonmin to a lesser extent. Most of the other stocks have in fact recovered very strongly off their lows. So we've been invested in platinum since last year, and platinum's worked out really well, but we continue to have a big position in platinum and Amplats in particular.
Just to debate that a little bit, Sam, obviously the platinum price hasn't moved much, if I recall correctly, since August last year. Meanwhile, the costs continue to rise at quite a rapid rate. So when you make an investment like that into Amplats, I believe you must be taking a view that the platinum price will rise faster, at least than the rand cost price of producing that. Or is there another way of looking at that?
There are a few different ways of looking at platinum stocks, but if you don't mind, can I just give you a brief context? Because I think everything that's happened to us and the way we've invested has to be seen in the context that an investment manager has to make decisions today. And I think it's one of the toughest environments for investment professionals, because the context is that central bankers all across the world have effectively bullied investors, and it is bullying, I use that term intentionally, into out of treasuries or fixed income low yielding instruments,
right,
into other instruments, and they have to be willing to accept lower yields, which really means that they're paying up for things that they ordinarily would not.
Right.
So that's the first context, and South Africa is no exception. Of course, as a contrarian, I'm saying, well, where in the market can I find any stock where investors haven't been bullied, where investors haven't said, well, look, I'll keep paying up, notwithstanding the fact that that the outlook's not that great. So platinum firstly fits that bill. then the earnings of the platinum stocks really is a meaningless number, unfortunately. So most people who talk about P ratios, earnings yields, dividend yields, in the case of platinum stocks, those particular metrics, they're meaningless in the short term. So of course, if you are a mechanical value investor, then all of a sudden what do you do, when Amplats makes losses? So we have other tools that we bring to bear on a situation like this. And if you look at Amplats, it's in fact undervalued relative to its long-term history. It's undervalued relative to fundamentals. And last year was an anomaly because production stopped, costs were a lot higher. You have to look through the cycle and you have to look at its dividend-paying ability when things normalize, which of course nobody's bothering to do right now. So when you do all of that, it is incredibly undervalued and more undervalued than it's been for the last 2 decades. And remember, in the late 90s, platinum was really cheap. So for me to make that statement, it's quite a statement. There is one key difference, that the platinum price itself is a lot higher than it was in 1998. So the risk is that the underlying driver of earnings, being the platinum price, the Rand platinum price, that could fall a lot. The problem though is that you can't know. That's why we face with uncertainty. And my feeling is that everything that's happening today with Amplats, in fact, gives you some sort of floor under the Rand platinum price, which is good for all platinum stocks.
Let's go back. You see, I keep testing your philosophies here. Now, let's go back to when you were at Investec and we used to chat about MTN.
Sure.
You used to love MTN.
I did.
And I believe you still love it as a business. Now, we were speaking to Claude van Cake from Sanlam Unconstrained Investing, and I pointed out that he's got a philosophy very similar to yours, but he's got MTN in his portfolio, which is trading at pretty much all-time highs. So how do you feel about MTN?
Well, once again, let me talk about the business. And I would say I continue to love the business. I think it's a high free cash flow generating business. It has structural issues, but they're not affecting the business today. In the long run, they have issues. They obviously have a Nigerian business, which I think does very well. But the stock itself is very fully priced.
At 173 Rand?
Yes, absolutely. Now, you will recall that I've really loved mobile telecom stocks, with MTN, Vodacom, and Telkom was a stock that I would have been very wary about. There's been a complete about change. Currently, Telkom has the worst outlook, but the stock is priced for that and more. And MTN, I think, has a decent outlook. But just because the share price has done well doesn't necessarily mean we have to follow. So we're very happy to sit on the sidelines, and we have 0 weighting in MTN.
He's giving all the right answers. I'm about to just stop and give you whatever little bit of money I can scrape together.
Thank you very much, Brian.
Sam, I wanted to ask you, I think what is a harder question than asking when to buy is when to sell.
Sure.
And when do you decide, and we'll put it on air here because we know that all investment managers make mistakes.
Sure.
At some point you've got to cut your losses as well, and you hope that in the long term you make more winners than
That's the
losses.
question I should have asked Claude on MTN. When are you going to sell it?
Yes.
Yes, I think, okay, so there are quite a few issues there that hopefully I can touch on, and please stop me if I haven't. You are correct in saying that investing is really about mistakes. So given the fact that you're dealing with uncertainty, and the uncertainty is about what's going to happen or the distribution of outcomes, because sometimes you know more or less what will happen, but you don't know how it will be distributed. Effectively what you're saying is, I will make errors. I need to be compensated for those errors. So I don't want to become too philosophical, but when a stock is high and priced very highly, the margin for error is actually very low. So if you get it wrong, you can really, really, really be hurt. So what we try to do by going in the rubbish bin or in buying cheap stocks that are bombed out is we're saying that, hey, it's a competitive market, but if we get it wrong, which we invariably will, there is some sort of margin for that error, and most times that error doesn't hurt us. So that's the key point. So we try to have a big margin of safety on the buy side, which is easier for us. Our difficulty comes on the sell. I'd be open and say that we're not very good sellers of stocks. We find that a lot of the stocks that we sell continue to do really well for other investors.
Right.
Which is why there are certain market environments where we are executing perfectly, but we lag in the market. Now, the latter part of last year is exactly a case in point, because if you ask me, Sam, the process, is your team doing what they're supposed to be doing? And I said, yes, I'm very happy. When you look at the scoreboard, you know, the value fund, now that I've taken it over, will be lagging the market. But this is a market where, you know, we're willingly selling early on the basis that we cannot make a case for stocks that are highly priced, and we think the margin for error is very low. So if we get it wrong, which we will,
Right.
we could really lose money permanently, and we don't think that's part of our fiduciary duty to investors. So I've touched on a few things. I hope that
Yes,
that you realize that we're good on the buy side, we accept that we're weak on the sell, and that we sell early, and we often sell, you know, well, the stocks continue to go up, but we're very happy with that, because we think if we do this for the next 20 years, that our strategy of buying well works for us.